Welcome. Here's a live demo trade example shorting euro against the US dollar using my divergence pullback trend following strategy. So I'll break down the exact rules of the strategy, why I entered this trade where I entered it, why the stop loss is placed where it's placed, and where the take profit target is where it is. Before getting into all those details, a quick shout out to my affiliate, BingX Exchange. I want to introduce BingX Exchange to you guys because I'm a big fan. They allow you to trade Forex, crypto, stocks, indices, and commodities all on one platform with good competitive fees and no KYC needed. They're also hosting a limited time Trade Pro exclusive event for my viewers. There's only 8 days, 22 hours left for this, and it's limited to the first 50 users, but you can get additional rewards like making a deposit, $50 bonus, making a trade of 3,000 USDT volume or higher, get an additional $100, and a bunch more. So check out the notes and terms to see the specific rules for this, but make sure that you sign up if you want to get these bonuses before the 50 user limit is up or the time runs out. Now check it out with my link in the description down below, and I'd appreciate that. Now let's get back to the video. So what are the rules to this trend following divergence pullback strategy? Well, we need to know the trend direction, and that's going to be determined by these exponential moving averages. If the yellow 50 period exponential moving average of an hourly time frame is under the 200 period exponential moving average of the hourly time frame, then I'm looking to short on pullbacks. And how do I know when to enter? Well, I need to spot a regular bearish divergence. If it's a downtrend, I'm looking to short. I want to have bearish divergence, okay? And as this pullback comes up, we see that money flow is coming to the downside. So we can see this trending to the downside here. This is the 30-minute time frame, and as price comes up, trending to the downside on money flow, you can use this indicator, the market cipher B, but if you want the free version on TradingView, it's called Fu Manchu cipher B plus divergences. It's the same thing, and it's free on TradingView, okay? And money flow coming to the downside, there's our bearish divergence. We have our 45 minutes here coming to the downside as well. So we have our bearish divergence on multiple time frames, momentum as well, starting to trend to the downside, although I don't want to see it come too much higher here. And that's the idea. I see that this pushed up, made a higher high here. Clearly money flow bleeding out. So all the way pulled back to the 200 EMA. So we're at a deep discount, and I'm looking for a trend continuation move at this point. So the stop loss placement and the take profit target, how are we going to do that? Well, we have this placed to the low before this pullback began, and then we have a 1-to-2 risk to reward ratio, which is how the stop loss is placed. All right, so stop loss is placed purely based on where our target is and what's going to give us a good risk to reward ratio. I always recommend at least 1 to 1.5, but typically I go 1-to-2 risk to reward ratio with this type of strategy, although it can still work profitably with a 1 to 1.5 risk to reward ratio, okay? As long as you have a positive risk to reward ratio of at least 1 to 1.5, trend following pullback strategies should be effective. Over a series of many trades, of course. You never know what's going to happen on one individual trade. But this is the idea of the trade here. The reason I'm not targeting a logical level over here is because we already swept this logical level right here. And the next one is way down here. It's just too far. So I'm just targeting a new low here, as I think that this may start forming a bottoming process down in this area. So this is going to be my last short for a while on euro against the US dollar. So we'll see how this pans out, and I'll update it as necessary. As far as my trade management goes, I'm going to be getting my stop loss to break even once we start breaking down in structure and having a follow through to the downside. So see this low right here, higher low. We break structure bearishly, pull back and continue down, and I go stop loss to break even. So if this happens, we break structure, I see a green candle, below pullback, whatever it is, and then another follow through to the downside. That's going to be stop loss to break even right here, okay? So that's trade management, and I'll update it as needed. All right, so this trade just hit its profit target, and this is a good example because it was so close to hitting the stop loss up here. First, it had a move to the downside, as you can see, and it came back to the upside, and it was within a very close distance of the stop loss, but then we have a strong spike in the trade's favor, hitting the profit target very swiftly. So that one is a good example of how things aren't always going to go straight in your favor, and you do have to just bear with it and let it do its thing, because sometimes it's going to almost hit your stop loss right before going in your favor, and you should not close it out for a loss when it's right here. Just let it do its thing, let this strategy work, and sometimes you will just have to take losses, okay? So that'll conclude this one. Thank you guys for watching. Don't forget to check out the link for BingX Exchange. Still a short amount of time left on that promotional offer. And thank you guys so much for watching. Have a great day.